Manisha, hi, good morning. Good to have you on the show. And after a long hiatus, wanted to talk about the gush of IPOs that one has seen, so far this year, and many in the run-up as well, all through this year and the next for that matter. They've clearly, Manisha, been catching the fancy of retail participants, of institutional investors as well. But how is it that you're looking at this rapid listing of companies? And more importantly, is this an indication of economies and markets clearly looking for fresher ideas and perhaps newer companies as well?
Good morning and thanks for having me. Good to see you after a long time. I think the IPO market is really reflecting the systemic change that's happening in the economy. COVID accelerated the digitization of the economy, the virtualization of the economy, and that's really why this sector has gained critical mass. Till 2 years ago, we all thought this was a Bangalore and Gurgaon syndrome, small companies, some specific investors who really invest in this sector were coming in. But I think there was such a fillip through COVID, not just digital natives, but the elderly, homemakers, everyone jumped onto the online system. And today we think that by 2030, India is going to have about 500 million consumers online. So I think that's really why this sector has got the attention of all investors, because you're really seeing this as the formation of a new sector in our country, much like how FANG is in the US or in China, you have the Tencents and Alibabas. You're seeing that happening in India, and that's why you're seeing the excitement that you're seeing. So I believe the excitement is justified. Valuations, we can all debate. I think you were earlier mentioning that the market sort of seen a straight line rise in the last 2 months, and India has been the best performing emerging market. But I think the fact that these companies are being able to IPO is really welcome, because you're actually giving exit to investors who've been invested from an early stage in the domestic markets, and I think that's a really big positive.
Sure. But Manisha, is the space getting a little frothy? And again, the debate about valuations. Sure, yes, the secondary market as well has moved up in a straight line fashion, and India is the darling amongst emerging markets, but purely because these businesses are not profit generating yet. Do they really justify the valuations, or is the market clearly looking 5 to 10 years ahead?
I think the way you just gave the answer. I think the way to look at these investments is 5 to 10 years. You can't look at this quarter on quarter, like unlike what our Indian market has been used to till now. When people invested in an Infosys or a TCS or a Reliance, these are mature companies. You could monitor them quarter on profitability, growth, etc. This business is not about that. It's about basically growing into these businesses. And those are the companies that basically investors need to back. They need to pause and think, which are the companies that 5 to 10 years from now are going to be around, are going to be delivering on the promises. The founders are of high quality. The investor base that's been backing them is credible names. The board of directors is a good board. I think all of the hygiene factors that we see in companies when we invest traditionally. But I think the key is not to get carried away, as you said, in the frenzy, because I'm sure through this whole frenzy, you will see some not so great companies also get past. But the key is to remain averse and remain with the companies where you can just fill it, shut it, and forget it for 5 to 10 years.
Yeah, and I think the challenge will be that, right? Identifying the ones that actually have the potential to not just survive but thrive over the next decade or so, and ensure that you cull out the ones that may not see that kind of potential due to a variety of reasons. So there may be some not so great companies as well filing for IPOs. You need to be able to identify those and stay away from them. Hi Manisha, this is Mubina as well joining in. So the fact that the IPO market is seeing so much of a response, the fact that investors are ready to pump in money into the IPO market, subscription numbers have been through the roof. Does this also sort of encourage new investments into startups in a way, because investors have this certainty that, okay, look, the large street is ready to give us an exit in the fairly near future when we do want to get out. Like you mentioned, right, it's very welcome because early investors are finally getting an exit route. So will this also in a way encourage new investments into maybe startups, more M&As as well?
Absolutely. I mean, this is critical. It's exactly what happened to the private equity market, right? Private equity basically now has demonstrated that, when they've done controlled transactions, they've managed to get exits through the IPO markets. Now the early stage investors who came into the tech companies and who thought they would have to flip their shareholding, create all sorts of complicated structures to then go into the US markets or UK markets or Singapore markets to go list, and that inevitably creates its own tax leakages, etc. Don't have to do that. The domestic market is saying that we have the ability and maturity to understand these businesses, to absorb these businesses, and to give you an exit. This, I think, will accelerate the investment into this sector more than anything else, because the first question an investor is asked from his committee when he invests in any company globally is that what is the exit? And typically till now, as bankers, as investors, we've been saying things like, oh, there could be a strategic exit, there could be a larger company buying into the smaller company, we could look at other investors. But I think we've never said that the Indian domestic market can absorb it, and the domestic retail investor will absorb these opportunities in such large scale. So you're absolutely right. I think this is going to be a game changer for the kind of investments you'll see in the startups.
Do you think that is something that's leading the M&A landscape in India? If you could just throw some spotlight on that, which are the sectors where we are seeing a lot of M&A activity?
So if I could just split the M&A, there's domestic M&A, there's cross-border M&A, outbound and inbound. I think domestic M&A, you'll continue to see the bankruptcy opportunities, the Piramal, DHFL kind of opportunities that will continue to, continue and even accelerate the pace with the kind of funds that are being set up, Oaktree, Cerberus, et cetera, which are looking at these opportunities. That's one. Then secondly, as you said, the startups with the kind of liquidity that they have, right? You've seen the likes of Baiju really lead from the front in consolidation in this sector, because as we discussed earlier, they have to demonstrate growth. And to demonstrate growth, both organic and inorganic opportunities are welcomed by them. The kind of talent war that's happening, I think acquisitions will solve a lot of that problems that some of these startups are facing. So I think in the startup ecosystem specifically, you'll see the large caps, buy into the small caps and mid caps. You may see some cross-border acquisitions for technology, etc., but basically I see it as a domestic game. In the inbound, I think you'll continue to see a lot of excitement in pharma, in renewables, EV space. I think these are the sectors that you'll continue to see. Outbound, I think you'll see traditional IT services companies, etc., buying into technologies, right, like AI, etc., cloud computing. You've been seeing the likes of Wipro, etc., leading on that front. And of course, the private equity activity continues pretty much across these sectors: IT, pharma, consumer, inbound. So that's how I see it. I see M&A continue very, very strongly through the next 12 to 24 months, just because India's got critical mass, Indian companies have liquidity, and global companies are looking for markets and technologies in India.
Manisha, it was great chatting with you. Thanks so much for joining us today on ET. Now, you've given us a glimpse of sorts into, what PE investors watch out for when they invest in these startup companies. One of the key questions asked is exit routes and opportunities, and they're getting that now thanks to Dalal Street. Thanks so much once again for joining in.